walk through the concept of a power trend. Well, first, I think walk through kind of the larger goal behind the power trend, why you came up with this indicator.
Yeah, so boy, it was like 10 years ago now that Charles Harris, a great friend of mine and probably the best trader that I've ever witnessed besides Bill, and Justin Nielsen, from IBD Live, and we took on this project. It was called Market School, and we were going to try to make black and white rules to mirror what Bill was doing in the market, because there's the follow through and then there's distribution, but there's all this in between. It's just like buying a stock at a pivot and selling it at a climax. Well, that's great, but what about all the nitty gritty in between? How hard do you put on the gas and everything? So we wanted to come up with just black and white rules, because you know how it goes when you're just kicking butt in the market. You end up taking more risk, right? Which is great until the end. And then if you've been kicked around, you need to take on risk, but you're too scared to, because you're like, wow, I just lost. So we wanted to have something as a gauge. It was kind of a speed limit of saying, oh, how fast should I be going? Because if I'm 5 miles, going 5 miles an hour and the speed limit is 55, there's a problem. If I'm going 100 miles an hour and the speed limit is 0, I've got a problem. So we took on this massive task, and it was huge. It was something that I'm most proud of working with a team, a great team, to come up with. And we just started the way Bill started with the model books. He wanted to know what made stocks go up, so he started at the beginning and looked at them. We did the same thing with the market, and we printed off the history of the market on daily charts. And then Charles and I just took different highlighted pens, and we said, okay, well, green is for the market you want to be in, red is for the market you want to be out, and then there was something for this choppiness. And then so we just studied it and came up with rules. And then Justin helped us out with that, and he had this massive Excel spreadsheet, and we'd say, well, what if this happens, and what if that, and let's try all these different rules. And in the end, we came up with, buy signals and sell signals, and that tallied up to how deep in the market. But then there was this other thing that would happen, and we noticed with Bill, sometimes there would be 5 or 6 days of distribution. He'd say, you got to get out of that market. That market's going down. Other times, there'd be 7 or 8 days of distribution, and he'd still be buying. And we're saying, there's something unique here. And what it was this power trend, this special time in the market where it's stronger than normal. And so we just backed into that. We looked at all these big trends in the market over time and went to the very beginning of them and just did it completely Bill style, saying, okay, at the very beginning, like your pivot, what do they all have in common? And we came up with these characteristics, and we tried to keep it as simple as possible. And so
how many do you remember how many power trends over the last 100 years, or because you looked at all of the markets that were available, right? So
yeah, we looked at everything, and I will try to look for the spreadsheet with them, but I'd say less than 200 on the history of the NASDAQ. Now, some of them are short.
It's a lot more than, yeah. Well, yeah. What was the shortest one?
The shortest one, I think it was just a few weeks that it lasted. Okay.
Yeah.
Most of them are longer. It's just like think of it like a base breakout. You get those base breakouts. It's a one-day wonder. It goes up and then it comes right back down.
Yeah.
But it was when you come up with rules, you want to make sure you're not you're not data fitting, and that's what we were very careful to not data fit, because we could have kept up. You can go and come up with some very specific rules to get everything exactly right. But that's not going to work in the future, because now you're just looking and saying, okay, I've got this set data, and what rules will work. We were everything every day was be intellectually honest, which is very hard for researchers to be and be conscious of it. So what we came up with is that I'm just looking at it to make sure that I don't forget anything. Is first, your low is above your 21-day, and we use the 21-day exponential for at least 10 days. So that's one thing. And then the next thing was your 50-day, or your 21 had to be above your 50-day for at least 5 days. And you always turn on the signal on an up day, because that was just a Bill concept of, we never saw Bill increasing exposure on a down day. So that was simple, just on an up day, just to be intellectually honest. We could have had better performance if we did it on a down day. But then the last thing was, we wanted that 50-day to be in an uptrend. Now, this is where we
Oh,
gave up
wow.
a
Yeah.
lot of juice on it,
Yeah.
because if we didn't use that rule, the performance of the power trends would be a lot better. But what would happen is your loser rate or your failure rate would go up too, because when you're coming up through a declining 50-day, the odds are stacked against you. So it's just that little bit of extra, and that's typically the thing that you had to wait for. And that's what happened here. Like, where our low had been above the 21-day for a long period of time.
Yep.
Yeah, your 21 was through your 50 for a while, but we had to wait for that 50-day, patiently wait for that 50-day to turn in and to move up.
Which
Now,
was May 8th, finally.
May 8th. Yeah. So
which was a long time since the fall through day of April 6th.
yeah. And so this is not an extra buy signal. We were already, with our market school rules, we were already we were at a +5, which means 100% in, early in, like right after the follow through.
Yeah. And also, and when last time you came, we spent a bunch of time on when these markets get over the 21-day. That's a big positive, and you want to have more confidence in that if you have a fall through day too.
Exactly. So why don't you look at the April 6th follow through, that first one. So right there, that was your green light. You had your follow through day, and then 2 days later, it was an up day, and your low was above your 21-day. So that was another huge signal. Plus, it was another big up day. And so we have all these rules that are buy signals, and so we were deep in very early. So it's not that we're waiting for the power trend. What it is once that power trend turns on, you say, I'm in something special. I'm in something that could be a lot longer than anyone thinks at this point. And so I'm going to just default to being more aggressive. And that, with the market school rules, that translates into a whole different shift of how we look at rules. And that would take 6 hours, honestly, to go through. There's a home study on it, and that gets into it. But essentially, it means you're more aggressive. So why don't we look at some historical examples? And what I'm very happy about is that we did this all off of the NASDAQ. And then you go back, and if you do an out-of-sample study that's on the Dow or the S&P or any other index, it's working there too. And so we're going to start off in history. And I wanted to start out with 1949 because we had talked about how I was using that precedent from 1949 to 1966. So look, there's where that power trend starts. And again, we were waiting for that 50-day to turn into an uptrend. That was that last missing piece. And look how far it goes. So it doesn't mean when it ends that you're waiting for that to end. Obviously you would have, on that gap down below the 50-day, you would have been out of the market.
That's
at that
right,
point.
over here. Yep.
And we have all these signals that would have, gotten us out. But what it's saying is that when that 21-day going back through the 50-day, which is what turns off the power trend, you're waiting for that to happen to say, okay, the special occurrence is now over. Now we have some other rules, or circuit breaker rules, that we were going to talk about today, but after looking at them, dusting them off, it's just too confusing. like really confusing.
I'm glad you came to your senses on that one.
Yeah.
Or I was going to have a really nice long nap during when you were going to explain that.
Well, when we used to teach that at live seminars, oh my God, you'd have people passing out.
Exactly. I remember sitting in the seminar was like 8+ hours or something. Yeah. And I was like, I like the idea, but I'm totally confused.
Imagine having to teach it.
It's true. It's true.
And then Charles wouldn't remember all of the rules, but he'd rely on Justin and I. He'd be like, what's that one? We had the stuff down. Oh my God.
So for this example here with the 1949 power trend, it started on July 26, 1949, and ran all the way till June 29th, 1950. So almost a whole year.
Yep.
Now, obviously, a few weeks before, you had started getting out because it started to sell off in short distribution, and then of course it gapped down below the 50. So most of our stocks are probably getting hammered at that point. But
but look at that 21 day on there and pay
yeah,
attention to that. That is, just like it always is. Most of the move happens above it. It comes down and goes back up, and when it tests it in a positive way, that's again where you put on the gas pedal.
Yep. Okay,
So let's look at another one. And we'll go through the rest of these quickly because this is something you guys should, what I would do if I were you is I would, watch this on video and then go back into MarketSmith, do a change date and study these. So this one is so long that it couldn't even stay on the entire chart.
It's incredible.
So October 28th, 1953, again during that major bull market. It turns on and it stays on this whole time. Let's go out to the next slide. And it goes this entire way until August 22nd, 1955.
So that's almost two, what was that? I'm going to go back for a second. So a year and a half.
Yeah. It's
without
massive.
it going, without it. So what turned off this power trend? Did the 21 went below the 50?
Just barely, and it went through. And so rules are rules, and then what happened is it turned and went higher. And so our, you would have still had exposure. So it's not a sell signal. What it is it's saying your default is no longer the gas pedal, and you look.
So you're getting off margin at that point. Is that? Or
well, yeah, you would only really be doing margin within market school when a power trend is on, because that's
when it goes, because you have 5 counts in market school, and then 6 and 7 are the margin. The 6 and 7 can only happen on a power trend.
A power trend, yeah. And so you can see that gap down that happened, and that's not bad data. The other chart had some bad data. That's the Eisenhower heart attack, and Bill would often talk about that and say, when the Eisenhower heart attack happened. Now, I don't think he would have been very brand new of trading. I'm not sure that he was actually trading in 1955. But still, I mean, that was a big impact in the market. And you can see that, it went through this little correction and eventually came out of it. So let's look to the next one. You've read Darvis's book.
Yes,
this is when he was making his money, during this 1958 power trend. May 9th.
Lorillard, was that?
Yeah, that was one of them. Diners Club, and
that's right.
God, was it? It wasn't Zenith. I can't believe I'm blanking on these, but was it Thicol?
That's right.
Thicol.
Yeah.
So he, in fact, all of the stocks that he traded ended up being model book stocks. Like, he was the excellent stock picker. It was he had everything right. So, anyways, you're on this entire time until September 2nd, 1959. Your 21 day goes through your 50 day. And now you've switched gears. You're no longer saying, hey, by default, I'm being aggressive. So let's fast forward. I think the next one's in the 80s. Yeah. So the very beginning of the major bull market, right? This lasted from 1982 to 2000.
This is where how IBD was funded.
Yeah.
Right.
Because Bill's a stud and he made all that money, right?
Exactly.
No one better. No one better. And so September 2nd, 1982, it starts and ends over there on July 29th, 1983. Again, 21 day, just rolling over through your 50 day.
Yep.
So let's see the next one. So you guys are getting the idea. This is 2003. I remember this like it was yesterday.
Me too. Yep.
Yeah, right. It was, this was, everyone was so scared, and that's a whole topic for another day. But so April 29th, it turns on, and 2003, February 27th, 2000, it turns off.
Mm-hmm.
And that would help you during that time frame. That was very choppy in there. Like, if you step back and looked at a weekly chart, it's like, oh, it just goes straight up. You look at a daily or an intraday chart and it's all over the place.
Yeah, that's
what's helpful. If you have that power trend going, you're like, okay, don't get stuck in the intradays or the dailies as much. Your default is to step back and say, it's still in an uptrend, a power trend. And so my default is to be aggressive. So let's look at I think the last one. So this is your, and we've talked about expectation breakers, and you can see that over on the left side of the chart before things really fell apart.
Yeah, I'll move the picture.
Yeah. So, anyways, it starts on April 2nd, 2009. Again, the market, or the world felt like it was coming to an end, but
Yep.
we had to follow through. And this massive bull market started, and then the power trend ended on February 4th, 2010.
Very, very cool. Yeah, and so this really just puts in, and this is one of the things when I attended the market school course.
Did you stay awake the whole time?
I did.
You did?
My head
You
did
were the
hurt
one
after.
guy.
Yeah, because it was really cool, and I was very, very excited about it, because this is really the one of those large questions that you always have. How long do you stay aggressive and keep pushing it, because you know that anything can happen and the things can change in the market so quickly, and so it was really exciting for me to see that you guys studied this and put some rules in place to give an idea of it. So yeah, these are really, really cool examples, and hopefully, it'll excite others to go back and take a little bit more time to study this.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.